If you're not profitable, is literally probably just two reasons. One of two reasons, or maybe both. It's super simple, and it's something that it took me years to figure out. I mean, I've been trading for extremely too long to not have figured this out earlier. But so number one is because you don't have a strategy that is proven to work over long periods of time. So people fail to realize that, and it stresses me so bad, especially from a lot of the new traders. Everyone wants win rate strategies. I said win rate, high win rate strategies, and I get it. Who wouldn't? But when you start looking at things statistically, and you actually start being more realistic in this markets, you start to realize that you don't need a high win rate strategy. All you need is, I mean, dude, you could be profitable with 30% if you know what you're doing. You could be profitable with 45%, 50%. Like, it's entirely possible. All you need is just to have a strategy that is proven to work over long periods of time. And that means you need a back test. That means you need to go and forward test. That means you need to learn as much about your strategy as you can and master it to a T. That way, it doesn't matter if you lose sometimes because you know your strategy works. And if you lose, it's important to, and this is getting to my second point of why you're probably not profitable, is journaling. Because if you lose, but you're following the same model and the same system, all you have to do is just analyze where you fucked up. And once you start collecting a lot of data, it makes it even better because now you have something to compare it to. So you have 4 wins and 2 losses, or 3 losses. Let's just use 3 losses. You can compare one of those losses to the 4 wins, right? You can compare the wins to the losses, and you can see what you did that contributed to the win correctly. And you can see what you did that contributed to the loss. And you can analyze and reflect and obviously keep doing certain things and stop doing others. So I think people don't journal because they're not following a system. They don't have a model. And that's kind of how I was. A lot of people trade just based off emotion. They see how things look, or they're revenge trading. So of course they're not going to journal that because they didn't do a technical analysis on the higher time frames. They didn't take screenshots of the different time frames that they trade on. They didn't think about their emotions because they were in their emotion. So that's why, I mean, at least that's a big reason for me why I didn't journal in the past, is because I was just doing shit, right? Like, I had the parts and pieces of the strategy, but the strategy wasn't put together. So that's where I had to first fix to actually find the strategy that I know worked over long periods of time. And then from that point, when the strategy didn't work, it was just time for me to go and reflect and, fix, obviously. So that's number one. Just make sure you have a strategy that actually works and that is proven to work. And then number two is to journal, because it's so monumental and important, and it will really take you to the next level. It's like being a lawyer, or a doctor, or just different scenarios where you have case studies and shit like that, where shit's documented for a reason. You have different law cases. This person versus the state, or this person versus whatever. It's for a reason, because people go back and they read that and they reflect and they learn and they can see what went right and what went wrong, or what could have been done differently. So it's so important, and it's priceless. Like, I can't express it enough. How important journaling is. Even if you don't have a high win rate strategy, but your strategy works, journal it so that way you can improve it. You can see, oh, I keep doing this. I keep fucking up here. Let me do this differently. Let me change this. So I just want to show you guys. I was only going to show you 2 trades, but I want to show you 3 trades where um, I did follow my system, but one trade where I lost, and how I use that to improve to actually go back and win. So the trades were taken like this. This is the first trade. Excuse me. So this is the first trade. I'll go from top down, but this is the actual execution time frame where I took it. Beautiful trade. Super, super textbook. A plus for me, right? So in the daily time frame, we had this swing low formation being formed. Excuse me. So I was expecting expansion in this next candle here. Um, just looking for the lower, higher time frames, the hour, to give me more confirmation of that. And it did when I started seeing changes in state of deliveries, like these here, and then obviously here with displacement and a fair value gap. So that was a lot of confirmation that it was going higher even after I took the trade. So drop down to the 15. We were in a range. This range, we were already in this 50% range from this low to this high here. We were still trading around that. But then once we dropped down to the 15, we also had another range here that was created, 50% of that. So when I dropped down to this range, obviously wanted to see discount in premium, but obviously we want discount levels because we're expecting it to go higher. So we're looking for the PO3, power of three, open, low, and then high in the close somewhere up there. So we wanted to get in below the open or near the open. So we have 50% in the range. We wanted to see liquidity being swept. We're seeing this here, buy short-term low to this fair value gap into this order block, and boom, beautiful textbook. Like, it doesn't get any better than that. Like, that was perfect. Then you had this trade here. This trade was actually a loss. This is the picture of the loss, and then we'll go from top down. So on the daily, I thought price was going to go lower. Price was actually wanting to reach into this order block up here. So when you see the order block, creating, when you see the daily creating order blocks, you really want to pay attention to it because they usually act as magnets, and they're pretty strong. So I wanted to see it go lower for some reason. I was expecting price, not for some reason, I was expecting price to sweep some type of short-term low in this 50% range, like these here, or maybe even these here, and then drop lower, which it did start to do. It came up into this level here. So I always found the range. That's my strategy. I always find the range, my entry strategy. I find the range, find 50% in the range, look for a sweep. So had this sweep, we started going in our direction, and then it came back and actually stopped me out. So when you go back and you look and you reflect on these trades, you start to see where you fucked up at. And where I fucked up at was not paying attention to the higher time frame. I was more focused on my entry instead of focusing on the higher time frame. What was I missing about the higher time frame? Well, I was missing that price wanted to reach into this order block, or at least close to it, or fill at least 50% of this in. I was looking for price to go short too soon, if price even wanted to go lower in the first place. So I should have been expecting price to trade higher into those uh, fair value gap. To that order block. I'm sorry. Which it did do. Now you have it marked out here on the hourly, so you guys can see it. It's the order block, and it's what price wanted to trade into. You have the changes in state of delivery, which I didn't pay attention to. And if you really look at it, you can see that you had this low to this high here, 50% of this, and you had this liquidity being engineered, equal lows. Price came back and swept some of that liquidity before going higher. So I was looking for the same thing, except I was just looking for it on this side, right? Range 50%, swept, go lower. So it was the same thing. I was just on the wrong side of the market. So, and what did I learn? I learned that I need to pay more attention to the higher time frames and look for those changes in state of deliveries to confirm what was going on. And then once you realize where you fucked up at, this was the next trade that I took after this one, and it was a win, and I felt confident about it. And this is the trade. Beautiful, beautiful, beautiful textbook trade. A little more drawdown than I usually like, but this is beautiful. So same thing. That last trade, we wanted to go lower. We were looking for it to go lower too early. So once price actually traded up into this order block over here, about 50% of it, we seen a sharp projection, which we like to see if it is a true order block. So on the hourly, we started seeing changes in state of delivery. We had some up here, of some can't talk. I had some right here, some down here, but I usually like to see it sweep like a low or something like that, just to confirm a little bit more for me. So once we did get that and we got it with displacement, I looked for 50% of that dealing range from here to here, 50% marked out here. Price came up and took out this low. Took out this high, took out this high too, and traded lower. So it's the same thing. As you guys can see, I do the same thing every time. It's the same process. It's the same thing. I don't go based off of motion or this or that. I go based off mechanical things. So once you have that in place, all you're doing is just refining. right? So with that loss, I can go back and I can look and see where I messed up. Like, I need to pay attention to the higher time frame. On this trade, I noticed on the higher time frame we had changes in the delivery, but on the one prior, I didn't pay attention to it. So you can start to see the importance of actually journaling, whether it's a win or a loss, and how you can go back and reflect on those things. So I'm not gonna make this super long. I just hope this helps. Like I said, it's one of two things. If you're not profitable, it's either you don't have a strategy, or even if you do or you don't have a strategy. Number two would mean you're not journaling it. So even if you don't have a strategy, you need to still journal so you can figure out what the fuck is going wrong. Like, damn, I'm just doing shit. I'm looking at my journal and everything is just doing shit. Okay, that gives you somewhere to start. And you just go from there. So it is paramount, and I hope you guys really take that information and run with it, because it could be the missing key that you're looking for in your trading. You just seen a strategy, you seen how I trade, so now just go use my strategy or go find your own and journal, guys, journal. All right, peace out.